everyone. Thank you so much for being here today. I'm Shelley Rosenzweig. I'm a partner in the investment management group at Haynes & Boone. I structure and design private investment fund vehicles across the alternative landscape. We represent hedge fund managers, private equity, private credit, venture capital, private equity real estate, and we also help clients with ongoing regulatory and compliance matters. I'm going to turn it over to my fellow panelists and let them introduce themselves. Go ahead, Ryan.
Sure. So hi, everyone. Ryan Teal here. I'm with Allborn Partners. Allborn Partners is a global alternatives consultant. Myself, I head up Allborn's operational due diligence team, so there's about 125 people as part of that team globally. I also co-founded Allborn's AI podcast. I served on Allborn's AI task force and am a frequent contributor to both industry and media insights around AI and alternatives.
Great.
Chris.
I'm Chris Ackerson, SVP of Product at AlphaSense. AlphaSense is a market intelligence and AI automation platform. So we're transforming the the investment research process with AI agents that search and synthesize and produce tangible outputs like memos and slides in Excel. Our differentiation is we're vertically integrated in the sense that we've spent the last decade integrating essential data sets like company-issued documents, sell-side research from top banks, expert interviews, and much more. And then we've layered on proprietary search technology and AI workflows purpose-built for the investment research process. And we're used by over 6,500 enterprise customers across all asset classes, so hedge funds, asset managers, private equity, private credit, venture capital.
On my side, I'm a Dale intern. I head up systematic equities at Jupiter, London-based asset manager. I'm responsible for around $25 billion of systematic long-short equity strategies, as well as long-only active strategies. And I guess sitting part of this panel due to our use of AI and systematic techniques to run long-short equity portfolios.
Okay, great. So I have a very long list of questions, and we're very short on time. Let's jump right in. Ryan, I'm going to direct this at you first. You're the global ODD team lead at Allborn. Across the alternatives landscape, where do you see AI being implemented by managers, and which functions and use cases are you seeing the most adoption?
Sure. Thanks, Shelley. So I would say one of the biggest themes we're seeing within the alternatives industry as it relates to AI right now is AI acceleration. So over the past year or so, AI is really rapidly moving across the alternatives industry. And I think there's a few reasons behind that, but a key driver, aside from the technology itself, is kind of a shift in mindset. So a year or two ago, a lot of firms were prohibiting or banning their employees from using AI, but that's shifting. And now, not only are they allowing it, but encouraging it with staff, recognizing the need to kind of stay competitive by embracing the technology as opposed to avoiding it. To kind of put some numbers around that, at the end of 2025, we did our third annual AI manager survey at Allborn, hearing back from about 300 hedge fund and private market managers representing about $7.5 trillion in AUM. So a pretty good data set to pull some information from. The results showed that about 90% of managers were using generative AI across at least one area of the organization, and that's up from 50% in 2023. Only 3% of firms are banning AI, down from 15% in the year prior. We're seeing that adoption across all areas of an investment manager, and the areas that are seeing the most adoption are software development, compliance, marketing, and the investment process itself. And actually, the investment process is the #1 use case we're seeing in the managers in that universe. I would also note that based on the respondents, the number that replied that they're seeing moderate to notable productivity gains increased significantly. The other big jump was around AI policy development and incorporation across the organization. So that's jumped to about 85% in 2025, more than tripling compared to a couple years ago. I think the bottom line is that AI adoption is happening across organizations. It's not some future trend. It's happening right now. It's accelerating, and it's changing the way that firms operate.
Oh, absolutely. I work at a law firm, and even though we're limited in what we can and can't use AI for, we can use it. And we would be behind our peers if we weren't using it. And I would imagine that this industry is exactly the same way, especially because this is a cutting edge industry. Speaking of which, Amadeo, I'm going to direct this at you. You're the head of systematic equities at Jupiter. You oversee billions of dollars in AUM. Can you walk us through a specific example of how AI has materially changed your investment decision-making process in the past 12 to 18 months, maybe even 2 years? What was the use case, and what measurable impact did it have on either returns or operational efficiency?
Yeah, sure. So when it comes to AI, I would make a difference, first of all. I've been working with AI since the 90s during my first career as a robotics engineer. So some of the tools that we can still use today have been around for a long time. And especially when it comes to signal generation, alpha generation, some of the statistical learning techniques are not really new as of 2 or 3 years ago. They've been around for quite a long time. But where we have seen significant improvement in the more recent developments, especially around Gen AI, has been in the acceleration of our research workflow, where historically bottlenecks were about going from a very large list of research ideas, academic papers that we thought were interesting, and then it took quite a long time to go through those ideas, testing, implementing them, coding them. This is where we've seen very significant improvements in efficiency in terms of the rate of ideas that we can go through. And in terms of measurement, one statistic is that we have roughly been able to double the number of improvements that we're making into the live model, thanks to some of these operational efficiencies in terms of increasing the velocity of innovation, and really utilizing our time as humans where we can add most value, which is when it comes to critical thinking, applying our human judgment, and tasks that can be automated. Then that's where Gen AI has been extremely useful.
Okay. Chris, you're SVP of Product at AlphaSense, and you lead the AI product development. You're processing massive volumes of unstructured data for investors, managers, whoever. What are the most surprising or non-obvious data sources that have proven valuable for alternative asset managers? And how are hedge funds using AI-derived insights differently than they did 1, 2, maybe even 3 years ago?
Yeah, I love this question. I mean, AI is touching every part of what we build and what we do, but I love the data focus here. So I want to talk a little bit about our expert transcript library. So expert calls have been a cornerstone of the investment process for decades. Tegas brought an innovation to market years ago where they sold calls at a lower cost, but then transcribed and built a library of all of those interviews that investors could subscribe to. AlphaSense similarly did the same thing, and then ultimately acquired Tegas a few years back. This data set covers private and public companies globally. We're adding more than 20,000 interviews every quarter, high quality investor-led interviews. But what's so interesting now is we've added an AI interviewer. So this is an agent that actually uses the AlphaSense platform, runs deep research reports on any topic that it needs to run an interview on, so it gets really smart on the topic, and then autonomously conducts the interview. And so you can imagine one of the hardest parts of an expert interview is just the scheduling process. How do you get a busy fund manager and an expert on a call at the same time? Well, now you don't have to worry about that. The AI interviewer can interview the expert on their schedule, night or day. And we're seeing the impact of this already, where maybe as an investor you're running a handful of calls yourself, you're sort of same process, but then you can run 10 or 20 or more AI interviewer calls to go really deep on that particular topic. And we're seeing the emergence of new data sets that we can actually create leveraging this technology. So we've launched channel checks, where AlphaSense is running hundreds of these interviews every quarter across more than 100 sectors. and then measuring in real time price and demand signals across all of these sectors, and bringing those into the platform, and then synthesizing with AI the outcomes. And so this is becoming like a must-have data set on the buy side to track the sectors you care about. And so I think you're going to see more and more impact of AI transforming both traditional data sets that we've all used and also creating new ones as we move forward.
Okay. So I want to pivot for a second to governance. I'm sure that concerns a lot of people in this room right now. And any one of you can answer, but maybe Amadeo and Chris, you're probably best suited for this. From a legal and governance perspective, how are you addressing the black box problem with AI models? What governance frameworks have you implemented to ensure explainability, accountability, compliance with fiduciary duties, especially when AI-driven decisions can lead to unexpected losses?
Yeah, when it comes to AI-driven decisions, for us as systematic managers, this hasn't really changed over the last 20 years. For about 20 years, we've been using computer models that we have created to then drive investment decisions. So AI tools have just proven additional tools in that toolkit to continue to do the same thing. Ultimately, the responsibility lies with me and my team, making sure that the models are implementing intuitive investment insights that make sense and that will generate expected outcomes in terms of returns and risk. Now, when you're talking about obviously kind of LLMs, kind of large language models, very important to understand biases within that, which training data is being used. Are biases in the training data might, leading to unexpected outcomes. So it's very important to understand how it actually works as opposed to just using them as naively, kind of as tools that are just going to give you that magic answer. But again, when it comes to decisions, investment decisions have always been, in our case, been driven by models. So it's not really that big of a difference.
Similar story for us from that perspective, in that AlphaSense supports fundamental investors, and we want to make all of our users super analysts themselves, but ultimately the investor is still in control of the decision. We think about explainability and auditability as a first-class requirement. Absolutely, it's a great point. So every data point, every synthesized insight that comes out of AlphaSense or our models is cited, and you can inline click into the underlying data sources, really smoothly validate the information, and go deeper into the source, whether that be a company filing or a report from Morgan Stanley. And then in terms of the AI products themselves, we have a team of financial analysts that works with our AI team to evaluate every new feature, every new model upgrade continuously in order to ensure that we're meeting the accuracy, reliability marks that our customers would demand.
Okay, so is AI becoming a table stakes requirement for remaining competitive, or is it creating a meaningful differentiation? Are you concerned about systemic risks if too many managers are relying on AI tools or data sets that are very similar?
I think there's a clear risk for simple generic strategies to become crowded. But this is, again, it's an arms race. As systematic managers, we need to be using those technologies to be able to be more productive and accelerate our rate of innovation. But again, if you give the same tools and the same data sets to 10 different quant teams, they will probably come up with probably 10 different strategies. It's all about the questions and the investment insights that, again, the human creativity and that critical thinking is adding to the mix. And this is really the key driver of Alpha. What's great right now is that it's a very diverse ecosystem. 20 years ago, a lot of systematic managers were doing something pretty similar, and then you had events like August 2007. Right now, as I look at the systematic landscape, lots of different groups using tools and data in lots of very different ways. And I guess creating a very interesting job for all of you here in the audience in terms of allocating to hedge funds and really being able to tap to lots of different alpha drivers that should help to diversify your risk.
Okay. So Ryan, I have a two-part question for you. Let's start with looking from the outside. When you're evaluating managers, How do you assess AI capabilities as part of operational due diligence? And what emerging AI risks or best practices and key questions do you think that allocators should be asking?
Sure. So we're approaching AI very similar to how we're approaching other areas. So number one, we're trying to understand the risk, and then we're trying to understand what controls or practices are in place to kind of minimize that risk, and then ultimately, what is the end-of-day risk that allocators have to be comfortable for. The challenge with AI is just its breadth. So I mentioned earlier, it's touching every aspect of an organization, plus the pace of change. And you combine those two together, and we're kind of in uncharted waters. Some specific areas that we're looking at are data privacy concerns and accuracy and bias concerns. And those were the number two items in our AI manager survey in terms of areas that are of concerns to allocators. The other two that I would mention are concerns around cybersecurity. If you're talking to chief information security officers, we have our own cybersecurity specialist. This is something of high concern to them. If anybody has seen some of the deepfakes out there, they're really good. They're only going to get better. And the hype around AI deepfakes is warranted. The second area that I would mention is just around compliance and regulatory concerns. So right now, regulation is fragmented and evolving, and there is no comprehensive AI regulation, at least at the federal level in the US. What that results in is it's challenging to kind of incorporate and monitor from a compliance standpoint. Also with this AI uncertainty, this regulatory uncertainty, we are keeping aware of managers that are talking about their AI capabilities, but that's not actually happening in practice. And there's been multiple organizations that have been fined for this concept of AI washing. Mm-hmm. The good thing is that best practices are evolving, and the few areas where we're seeing that happen is, to your question about table stakes, from an operational standpoint, it's an AI policy. So again, about 85+% of firms have an AI policy in place and have trained staff on that policy. That's becoming non-negotiable for allocators. Number two, I would mention, is AI governance. So we're seeing, I think this is an area that doesn't get as much attention at organizations that it should, but we are seeing firms put in place AI task forces and AI committees, and following best practice in it, they have broad representation across the organization. And these committees or task forces are kind of the guardrails, but also the steering wheel to a firm's AI strategy. Some other areas that I'll mention is around scrutinizing disclosures, including in marketing materials, to avoid that risk of AI washing. Vendor due diligence is a big area, so firms are really digging into their vendor agreements and understanding how the vendor is using AI and how the data is being shared. And then lastly, I would mention firms are putting in place and kind of documenting situations when AI goes off the rails and what they need to do in those types of scenarios to make sure that their data and themselves are protected. So I think that at the end of the day, there's a number of emerging risks. There's a number of best practices that are evolving, but those are the areas that we see allocators really focused in on.
Yeah, the vendor side of it is really interesting because I'm a vendor, more or less, right? I'm a lawyer to clients, and they ask me now in our engagement letters, what are you using AI for? Is our name ever disclosed? Is someone back-checking and double-checking? And I find that those questions are so great, and those are the kinds of things that make me realize how important it is for everyone to have an understanding about how the touch points that AI has across. So you can use AI in your trading models, but how about all of your vendors? What are they doing with your data and your information? And what if there are hallucinations and something is wrong or reported wrong? Or what if your audit firm is using AI solutions and an audit gets reported incorrectly? So I just think that's really smart. But now I'm going to flip the question and look inward. How is AI changing due diligence and workflows in practice? What's working well and what's been challenging? And can you give any real life use cases?
Sure, absolutely. So I'll just talk about ODD at Allborn, and so it's had a significant impact. And so I'll just a bit of background. A few years ago, we took the whole due diligence workflow, and we broke it down and kind of deconstructed it into its various tasks and subtasks, and then we analyzed it through the lens of machine learning, AI, and now agents. And through that process, we came to the conclusion about 90% of what we do could be augmented by AI or machine learning or now agents. The 10% residual is the in-person meeting where we're spending time with the investment manager and having a conversation. We're still robots, we're still people talking to people. In terms of where we're seeing the most impact in some actual use cases, we have about 80 active use cases right now across ODD. Some of the more impactful ones are smart document review tools. So we've developed tools through our machine learning team. We've had a team in place since 2017. And that would be documents such as audit financial statements, offering documents, so very long, lengthy documents, a lot of unstructured data, which is a prime use case for LLMs. We're also using it to flag risks in questionnaires we receive back from managers, and also benchmarking across different managers, and then various background check enhancements as well. So we're already seeing real value through that. I would say one area that's still kind of evolving is around meeting transcription. It's starting to see people, we have not productionized it, but we're starting to see the industry kind of move in that regard. And if you think about all the meetings everybody has across the industry on an ongoing basis, there's a real potential kind of unlock there.
Okay, we only have a few minutes, and I have a few future outlook type questions that I'd love to hear from all of you on, and hopefully we can get to more than one. So looking ahead, 3 to 5 years, maybe even tomorrow, what aspects of alternative asset management do you think will be most radically transformed by AI? And conversely, where do you think human judgment will remain indispensable? Everyone.
Well, when it comes to generating alpha, our view is that human judgment will continue to be central to that process. AI absolutely accelerates research, accelerates deployment of ideas, but ultimately, it's the human team sitting behind a hedge fund that really, it has to be in control of crowding risk, structural risks, risks of things that have not happened in markets, but that could happen. So an AI model might not have seen something playing out, but it's the human judgment and human creativity that can anticipate those types of risks. So absolutely, centrally to alpha generation, the human team behind that.
Yeah, I mean, I think as a starting point, we should assume that every investor will have effectively infinite analyst capacity. And so what does that mean for the workflow? You can look at any idea, go as deep into an idea, look at as many as you want. And I think this will radically transform the industry. I think it will make it more competitive. I think it will bring new players into the industry. I think it'll give the opportunity for new strategies and approaches to emerge more quickly. But I would agree with Amedeo. Ultimately, it is a human team that sits on top of that and has to direct that infinite capacity at the right ideas. And their time ultimately is limited on what they can digest and deploy and apply judgment on. So I think it'll be exciting, but that's our view.
I'll be really quick. So I think the rise of agentic AI is going to change a lot, and I think we'll look back, and today's traditional chatbots and retrieval-based tools are going to seem very archaic. In terms of the human judgment, I think where it remains in place is the trust. So the trust between the GP and the LP, and that infrastructure needs to remain intact to allow this whole thing to work well. So I think collaboration, education, I think are going to be really helpful to make sure that that remains intact. If you kind of think about the big risks, I mean, there's obviously risks out there around like geopolitical risks and job displacement risks. I think there's real concerns, but I think I would point to the near-term risks around cyber attacks, around deepfakes and around misinformation, those are here today. They're only going to get better.
Anything keeping any one of you up at night, AI risk related in the industry, where it's headed?
Well, I'll say probably empathize with most people in the room that the thing that keeps me up at night is just keeping up with the pace of change day to day. I'm ultimately an optimist on this. I think human beings have an incredible ability to adapt to change, and I think we'll figure out how to adapt and adopt the right governance processes to point these new technologies at ways that'll make the industry more efficient, more effective capital allocation, more effective at risk management, and ultimately just have a bigger and more positive impact on the economy.
Yeah, similar for us, the speed of model development. I mean, we're talking about weeks. Every week there's a new model release, and as AI users, we just need to be able to keep up with that acceleration of model development and the capabilities that this brings us.
Anyone want to add anything? I'll add one note here, because what keeps me up at night is risk and liability. That's all I think about all day long, is what are my clients doing and how can this expose them to larger liability or risk. And when I think about how quickly this industry is moving, especially with AI involved, I'm always thinking about disclosures and do I understand enough about what the client is doing in order to be able to write it properly or to explain it properly when I'm negotiating or when I'm having a discussion with a client about why they need to put something in their offering materials. And one thing that we've done as a law firm is create an AI group. So I have someone to bounce ideas off of and talk to and have conversations with clients. And I think because the speed at which we're moving is so quick, that it's really important to have that kind of expertise at your hands. So I would just add that as a positive. And thank you guys so much. I think this is it. I think we're done. But really appreciate you all sitting in and listening. And thank you to Ryan and Chris and Amadeo. And everyone's going to be here, so please feel free to reach out to anyone after the sessions. Take care.